Hello and welcome to another edition of 9 to 5 Live. My name is Mark Williams and joining me is Francois Savary. Francois, hello.
Hello, Mark.
Thank you for joining us. US debt accumulation, especially this year, seems like a runaway train. In fact, US government debt is equal to $100,000 per US resident. And the financing of that debt has now reached $3 billion per day, and that includes Saturdays and Sundays. How much of this run up to such a high amount of debt is down to the presidential elections this year? Obviously, politicians, they know what they're supposed to do, but if they do the right thing, they don't know how to get elected. Later on, I'd like us to discuss and contrast with the Swiss system, where there's a legal mechanism for preventing governments from overspending during the course of one parliament. Francois, what are the candidates saying? And is one of the candidates more likely to be able to do whatever they're supposed to be proposing in terms of winning the Senate and winning the House of Representatives?
Okay. When you look at the candidates, both of them are, in fact, if you look at the program, they are adding to the debt level of the US economy in the medium term. When you look at independent estimates of what they are going to do, what is clear is when you look at the program of Mr. Trump, clearly the debt issue is going to become more of a problem over the medium term than with Mrs. Harris, because he wants, to maintain the tax cut that was promoted in 2017, and it should die by 2025. He's ready to continue those tax cuts. He wants to increase them. And you have many fears that the debt level is going to balloon. Some articles that were published today on the Financial Times are giving the numbers. It's quite big in terms of where the debt over GDP could go under Mr. Trump. But Mrs. Harris is also promoting some kind of movement. It's less on the tax issue, even if she wants to decrease the tax on the small and mid-cap companies. But it's on the spending side because she wants to increase some spending. And this would also increase the amount of debt in the medium term. When it comes to the election and the result, at the end of the day, it seems not probable that any of the candidates will get the majority in the Congress and that the president would be able to pass laws through the Senate and the House of Representatives the way they would like to do. There will be some need for compromise. So we will have to check what happens on November the 5th.
So far, the dollar seems to be remarkably immune from the alarming headlines that we see about US debt. We can't predict when markets would start to give up with US fiscal policy. Do you have any idea how much US government could stretch US debt before governments finally decide that, mathematically speaking, it's impossible?
No, there is no possibility. At the end of the day, we get back to something which is called trust. The US government debt is considered worldwide as the safe haven. It is the asset that people want to hold, one of the assets people want to hold because they are considered as safe. And so the trust that is in the US bond market is quite significant. But trust is very shaky. You can't define why and when the trust in something is going to disappear. So this is, to my point of view, a negative factor for the US dollar in the long run. But the long run can be very long, as long as this trust is staying, there is no possibility to say, okay, it's the time for the US authority to act, because otherwise the US dollar is going to fall down quite significantly. Nevertheless, it remains something that we need to keep in mind. This is not a positive for the US dollar. The one who do not believe in this theory will tell you, the European situation is no better than the one in the US. The Japanese situation is no better than the one in the US. So why should the US dollar suffer? The debate is open, and I still think that people need to keep in mind this issue for the medium term.
If a future government did wish to find savings, where could it find savings?
Maybe the government, the Biden administration went too far in terms of spending with the Anti-Inflation Act, with the Chips and Infrastructure Act. Maybe there you have some spending cuts that are possible. So you have different levels in which you could cut the spending and reduce the deficit.
How is it possible for an economy that's running above its natural sustainable growth level for several years? How is it possible for that economy not to match spending to tax receipts? And is all of that excess growth, has that been caused by the loose fiscal monetary policy?
Clearly, you had the support of fiscal policy. Okay, you have three elements that you need to consider. The US in the last few years have been under the influence of three elements. First, the tax cut. When Mr. Trump lowered the corporate tax rate, this was an element that contributed to the deficit. The second element is the spending. When the Biden administration came to power, remember that, as I mentioned, you had two programs, the Anti-Inflation Act, the CHIPS Act, and Infrastructure Act. The amount of money that were spent were huge. They were quite significant. And by the way, the Biden administration was refrained from Mr. Manchin, who was a senator, because there was a second program that was looming. And at the time, a few years ago, 3 years ago, Mr. Manchin said, I will never vote this program because this is too much spending. And that's the reason why it didn't pass. So that's the second element. The third element is the interest rates. Because remember, with the inflation going up and moving up, the level of interest rate has risen quite significantly. So it means that the charge that you pay on the debt is increasing significantly year over year. So those three factors explain why you had such development of debt in the US. Does it mean that the US growth was only the result of fiscal spending? No, the consumer was a main part in the growth that we experienced over the last few years. But fiscal policy and the state spending contributed to growth over the course of this cycle.
If, let's hope it doesn't happen, but if markets do start to lose faith in American fiscal monetary policy, what kind of ammunition does the Fed have left? And the Fed is always faced with a moral hazard. Do they finally impose on the US government some kind of fiscal straitjacket, or do they continue to reflate economies as they have in the past, and therefore potentially be accused of contributing to the existing problem?
That's a question that everybody should have in his mind. And I think that is one of the most important ones that any investor should keep in mind. Okay, the big issue at the end of the day is inflation. Because if you remember, and as you said, the Fed was acting, supporting the economy and supporting the market over the last 15 years in an environment that was moving towards disinflation and risk of deflation, which was quite significant because in a way, if you manage the inflation, the Fed can say, okay, my mission is under control. There is no inflation, so I can help the economy. We have changed course and we saw what happened in the course of the last few years. Inflation made a sudden comeback and inflation was a major blow to the Fed and a very important element. Will they be able to act anyway at any time? It depends on inflation. Because if suddenly they act when inflation is coming back and they decide to support the economy, to support once again against any financial shock by acting on interest rates, bringing them to zero or something like that, if inflation is not under control, I think this is where the market could lose faith in the US economy, in the US debt market, and etc. So the environment we are going into is going to be different from the one we are coming from. And that's the reason why inflation is so important. To my point of view, the recent speeches by the different Fed members and the fact that they insist on the fact that interest rates are not going to be as low as they used to be is already a way for them to try to convince the market that they are not going necessarily to act in any circumstances. Will they be able to act this way? I don't know. Big question.
Let's go to the second largest economy in the world, so China, which seems to have the same issue. Is China partly immune from any contagion coming from the US?
And at the end of the day, the fiscal situation in China is not particularly bright. And that's the reason why you had they were so cautious in trying to promote a new program to support the economic activity. And, the fiscal situation is full of uncertainties, a local situation. Nobody knows exactly what is the amount of debt that is in the system. And not only the central, but the province have a huge amount of debt. And that's the reason why they refrain from acting over the course of the last 2 years. This is only recently that finally they accepted that because the target of 5% growth this year is under threat, they decided, okay, we need to do something. We want to act on the fiscal side of the equation. They need to come out with the real measures, but the public finance state in China is not particularly bright, and they are not immune either to their own domestic situation or the situation in the US.
If somebody is worried about this situation primarily, over and above all other considerations, where can they hide? What kind of assets should they be diversifying into?
Clearly, if you have an issue, and I'm not saying it's going to come next month or in the next quarter, but clearly, if there is less and less space in the status of the U.S. public debt, then I think that, and there is a risk then that inflation could make a comeback, because as I said, the Fed could act unwisely by lowering interest rates, resulting in more inflation. I think that real assets is the place where you would like to be. Gold could be a candidate, and that's maybe already acting on the price of gold. This is one of the reasons gold has been able to experience such a run-up, and it could continue. Real asset would be, to my point of view, something to consider. Equities could benefit, because if there is more inflation, maybe equities are going to benefit from that, but then it will depend on the extent that the doubt on public US debt is going to create volatility on the market. What is sure is that the bond market would be the place where I would not like to be.
Are you surprised by the reaction of the bond market the last couple of weeks? It's just ticking up.
No, because when I look at the numbers, remember we discussed at length the issue of the Fed. I was on the side that the Fed should have made 25 basis points and they made 50. I totally agree with people like Mr. Yardeni or Larry Summers when they say it was a mistake to lower by 50. I still defend the idea that they are not going to go for 50, that they are going to be very cautious in lowering interest rates, and people should be aware of that. I don't see why they should do more than 25 basis points in November. And voila, I think that it was one of the reasons I told you after the Fed cut, be careful with bonds, because the bond market is pricing everything for perfection. It was a mistake. And I am not surprised that we are close to 4% on the 10-year bond in the US.
Coming to Switzerland as a contrast to what happens in the rest of the major economies in the world, can you explain to us the Swiss mechanism for handcuffing politicians, as it were, in terms of overspending?
If you want to simplify it, it's very easy. At the end of the day, there is in the constitution the rule that obliges the parliament to make sure that over a cycle, you do not have a public debt increase or a budget deficit that is sustained. So it means that, and we had discussion in Switzerland lately remember the government came out and they said, okay, when we look at the numbers that we face, when we look at the future development of the fiscal position, there is a need for 4 billion savings. We need to save money because otherwise we would violate this constitutional rule. So this is what is happening. Switzerland was one of the first countries to impose that, but Germany has the same kind of settings in terms of legal constraint on the government ability to spend and maintain excessive budget deficit. So that's the way it functions. So that's the reason why you had the Swiss government, coming with very harsh measures proposal in order to master the deficit in the medium term.
So obviously anyone who is concerned about the debt cliff, as it were, could be moving towards Swiss assets just because of the currency and the way the currency is protected.
I agree and I disagree, because there is something that, okay, to manage properly your public finance is essential, but don't be silly. You know, there is a time where you need to make some deficit. You need to invest for future growth. You need to invest in infrastructure. You need to invest for innovation. You need to have the element in place to support the growth dynamic over the medium term. So yes, it is a good point in a way because it can reassure financial investor. Is it necessarily a good thing that you constrain your public finance? It's not necessarily a good idea. And you know, the best case, again, I go back to another country, Germany. I think that, for example, the ideological view of the German politician about this mechanism of controlling public finance is one of the reasons the German economy in a dire state currently, because they underinvest, they did not make the right choice for future and medium-term growth. So be careful. It's not necessarily a positive.
Francois, I think that's all we've got time for. Thank you very much indeed, and we shall speak next Monday. Bye-bye.
Thank you. Bye-bye.
Bye-bye.